All right, guys, welcome back to the channel. If you're new, hit the subscribe button. And if you find value from the content, you know what to do, hit that like button. Okay, today we're looking at the suspicious move on Bitcoin and for altcoins. On top of that, I've got the traditional markets to get through, some nice strong signs on the charts and with the data for the remaining bull phase of the 18-year cycle. Here it is right here. We've got the dollar to get through as it collapses and breaks down past 97 on the chart. Silver having a nice correction and holding above the resistance level that now may become support. But I guess what most people are here for is Bitcoin and altcoins. Altcoins also looking relatively weak on this rejection at 900 billion. So hit the like, subscribe to the channel if you're new. Let's dive in, have a look at more of these price targets, price ranges, and any of the invalidation points. Overall resistance level here is Bitcoin over the last 8 years using the overhead resistance here, 2017, 2021, 2024, 2025, and again, here we are in mid-25, slightly off that top, and now finding itself underneath 106 as I film this. So hopefully as we start to close out the day and the week, we do eventually see those closes above 106,500. Now, as I said, in the short term, the importance of that level is that it became resistance on the way down. So that was that first lower daily swing top. So first lower or first higher swings from a key turning point. And I emphasize that because those are, well, key. They're very important turning points that dictate the next phase of the move. If you've got a rejection underneath those tops, basically where you've got this little swing top forming, that then can turn into a much bigger move. Just like you can see from the low that we had at 74K in April, you've got a first higher swing low forming right there at 83,000. And then that is basically what the market builds on from that point. So now that the market gave us that number, 106,500, basically just explaining the significance of that level as Bitcoin. So it gave us a number here in January. As Bitcoin started to climb higher, it became resistance a couple of times until it broke out. It became support and then broke down from that level. It became resistance again. We attempted that breakout on this bar here. So that was Monday the 9th. And right now, we're testing that level once again, potentially closing underneath it. So in the short term, it's looking like further downside. I've got the 50% level here at 105,400, and that is off this little daily double top. If this extends into something further, if the move continues to build and we see closes underneath 105,400, I'll then be looking to the low here at 100K, and then the 150%, that's what this 1.5 is here. Let's zoom in a little, 1.5, that's of this move extended. So it's an extra 50% on that move down to this target. The reason for that is these signals of double tops, double bottoms, generally, if they are going to be strong, you would generally see them extend to 150% of the reference range. And if you're a short-term trader, it's a nice place to be able to put some sort of profit targets, maybe on top of that at around 95, maybe a little higher. But if you're a longer-term investor, at least you've got some understanding of what the markets are capable of doing, yet still remaining in a bullish macro structure. So just on that again, short-term, it could head this far, but longer-term, this is still in the stronger half. So that's still all looking relatively safe here for the Bitcoin bulls. So that's a short-term look there for the price charts, looking at the rejection at 110, looking at the support levels, looking at the next support levels. What do we have in terms of the market sentiment? Well, from yesterday, there was a close at 71 on the crypto fear and greed index. The main thing that we've been tracking this for is the time frames for the market sentiment. Like how long does the greed last for, or building up into that greed or that extreme greed, and how long does the fear last for, fear into extreme fear. So here is your extreme greed. It lasted down into the so that's the extreme greed, sorry, down into the extreme fear, lasted around 150 days. And as we were tracking this particular decline to the low and the higher low here on the sentiment, remember that April was the lower low on the price. There is the price that was lower low, but the market sentiment was at a higher low. We still measure that because that's the reference range in terms of the market sentiment overlaid with the price. So in terms of a rough number here, I'm looking around 140 to 150 days. So how does that help us from where we currently sit? If things are to rhyme and we're going to see something similar to basically this entire bull market, of course things can be different, but anyway, if we're thinking they're going to be similar, we can look for some averages and we can look for the shortest ranges and the longest ranges from one extreme to the other extreme. And that's basically people's, investors, their emotions. So roughly around the 144 days, we've seen that happen before. We've got a reading here of 140, 180, and 100. So around that midpoint's about 140. That's just an average. So it's important to keep the lowest end of the spectrum in mind and the longest end of the spectrum as well. As we move into, well, the end of the move, maybe the peak of this particular cycle, I suspect the sentiment is going to shift much quicker. You're going to see shifts from extreme fear to extreme greed much, much quicker, because that essentially means volatility. That's what volatility looks like. Early on, it's a little bit more subdued. You get these sort of longer moves. And then as we get into the tops, things get much more faster. And that's basically just a representation of new people or new faces, new people that are investing coming into the market. So that's the short term taken care of. The long term, still plenty of support to the downside. We've covered off the mid $90,000 level. Sure, the price could keep coming down, get into those high 80s. But at this stage, I don't think that is entirely likely. We've still got plenty of support there. Even where we sit here at 106, the day hasn't ended, the week hasn't ended. And essentially to the downside, you got the 100 level. And as we said, the mid 90s. So that aside, not to focus too heavy on the major support levels to the downside, we'll keep taking it day by day, looking at the next available price support levels. And a direct correlation to that is essentially the USDT dominance. On the weekly here, it is still grinding around between 4.4% and 4.75%. We saw that one rejection at 5%. So this is on the USDT dominance, mind you. 5% has been that one rejection there. And on the daily, just as it was looking like it wanted to break down, you had a couple of closes here underneath the all-time, what I'm calling the all-time support line here. This is the one that is very similar to what we saw with Bitcoin. You can see the all-time resistance line here for BTC. Through its history, USDT dominance history, it has held above this line. And when it holds above this line and starts to shoot higher, then you obviously see the bearishness, or basically just the downtrend start to form on Bitcoin and cryptocurrencies. And that's exactly what we saw again today. Total crypto market cap, excluding the top 10. So no Bitcoins, no ETH, no stablecoins. You get the idea, I hope. The others chart here with the exclusion, we saw another day down here get rejected at 7.74. If you remember from the previous videos, that has been a very key level for this market. It found some support, it bounced, and right now it's broken down and it's found resistance. Once there last week on the 3rd, and then again over the last few days has found more resistance. When this chart finds resistance, that means further downside for altcoins overall. When it rallies up, you get that excitement like we saw in the last few days, everyone getting super excited about altcoins moving up, and now they're all in the red, some in the double digits, especially with the meme coins and some of the other coins that everyone's been holding for absolutely forever. And they're just very much hoping that their altcoins are going to keep pushing higher. But while this remains underneath resistance levels and keeps getting resisted, it's basically just a recipe for further disaster for altcoins, especially if it begins to break down from 7.4 down to this low here at 7.35%. That's pretty much the last support levels. And that at the moment is a 4-year low. You don't want to see markets break to new fresh lows and hope that they're going to go higher. Generally, when they break to new fresh lows, you can see here, that had a rally, but here, barely a rally, enough to get people excited. Fresh low, not much of a rally, fresh low, not much of a rally. Fresh low. That was the last excitement everyone had, was May for a few days. Fresh low, a little rally. And you can see just how much people are hanging on this rally to get excited over the absolute smallest things now. We had a few days up. Everyone's getting excited, but literally just 2 weeks ago, we had a new fresh low on this chart, putting in a new 4-year low. So things at the moment still look like they want to keep breaking down. Eventually that's going to change, but I can't see that happening until we break above roughly 910. And my number that I've been talking about is around 950 billion on the total 3 market cap. So this one that just excludes Bitcoin and ETH, includes everything else. And you can see just in the last 24 hours, this one has also rejected here at about almost dead on. I think it was 900 billion. Yeah, just a few bucks short of 900 billion, couple of days down. It all sounds doom and gloom. Yeah, you know, there's the bearishness. There's all those gambling addicts with their altcoins that just can't fathom what we talk about here on the channel when we're just looking at the charts. But to give them and their gambling addictions a tiny bit of hopium, after I've gone through and smashed them down with others chart and the USDT dominance chart, which has also risen here, I'll come back to this in a sec, is this sort of quick move to the downside, if it is able to now hold, could be putting in a higher low. And like I covered already on Bitcoin as an example, looking at some of the chart patterns when you see first higher swing lows out of significant levels, if this is a first higher swing low forming out of this downtrend here, so basically you've got the downtrend, then you've got a rally up which took out the high. If we get a correction here and this puts in a higher swing low, then this could be the start of another move to test that $910 to $950 billion level. Moving on from that, let's have a look at Ethereum and how this has continued to fail at the 50% level. There is some good news coming up. There is a lot of good news, okay? So, and that's if you're not holding a lot of these altcoins. The Ethereum price has hit the 50% levels, 2,900, 20 bucks short of it, and then rejected. So we're back within this zone again. Whether it needs some more time to consolidate is the next question. Consolidation above $2,300. You can see here the lows, nice strong level here, previous tops. That is going to be the key for ETH to at least hold this strong position. Breakdowns from that point is basically another nail in the coffin, comes back to test the $1,900 level. So keep watching this. This could stay in a strong position. We have heard a lot about how altcoins are going to moon and how ETH is going to moon and all this sort of stuff. And it's, you know, it's fallen 20 bucks short again of my target of $2,900 to flip it from an okay position into a much stronger position. So this current rejection, not the greatest, but it hasn't broken down yet. So it could just be more churning here for Ethereum. So my investment theories, although it sounds bearish at times, it's mostly the bearishness comes from altcoins. They just haven't proven themselves this cycle. And my position overall is that we're still in a bull market. There is still no reason to say that it's not a bull market, especially for the 18-year cycle with the stocks going up, real estate going up, now precious metals also going up, US dollar declining, interest rates probably having to increase in the coming years. There might be a cut here and there, but overall it seems like they'll have to keep increasing. And for now, the US economy is not broken. It's probably breaking, but to me at least, it doesn't seem like it's broken. Basically, yeah, these are my positions. US stock market, still a macro bull, but in many of these cases, I think we're in the last phase. As for Bitcoin, I think that top is coming sooner than the others. Stock market, I think the top will come after the real estate market tops, and those are still going up as per the data. And so then the question begs is, how should you invest through the last bull phase of all of these cycles? When I talk about all the cycles, we've got our commodity cycle, we have our real estate cycle. Of course, there is a Bitcoin cycle that works within a real estate cycle, and a stock market cycle, which also works within the real estate and the economic cycle. It just sounds like a whole basket case of cycles, but essentially everything goes up together, and then we start to come down together with a few exceptions that run just a little bit longer into that peak. So if you are serious about that and you're wanting to take this further, you're not just about sort of gambling on altcoins and getting addicted to that sort of dopamine, check out TIA Premium. Link is in the video description. If you want further info there, you've got our gamblers that are doing very well because they're putting in plans to change how they see the market and they change how they are investing and trading in the markets. And if you want to check out some reviews as well from other members in there, there's a lot there that you can look at for free in the free section here. The S&P 500 is pretty much tracking along very similarly to our 5-year cycle. So this is 2020 in the red, and the white line is 2025 so far. It seems like it's, well, as I said, tracking along pretty similarly to what's happened after these significant corrections. The breadth data suggests that there is a lot further to go in terms of percentages to the upside, which is all relevant to Bitcoin as well. If the stock market is going to keep going high, obviously in my opinion, and we've got a lot further to go, generally Bitcoin will be dragged up alongside it. And that's what we've seen in the past. Doesn't mean it's going to peak out at the same time, but it could be dragged alongside it very close to the top. We know Bitcoin topped in November 2021 and the NASDAQ topped in November 2021, whereas the stock market topped the first trading day of January. So, a month, 2 months, it had extra in the stock market. But just in terms of the data here, rare and very bullish breadth thrust just triggered. The 6 to 12 months out, it has a 100% hit rate. There is a lot of data points here. I'm not always trying to capture a 100% hit rate. I'm obviously not trying to capture a 100% hit rate, but looking at the percentages is what I'm more interested in. 14%, 0.8 and 23.4, 12 months from now is a pretty decent climb for the S&P 500 if it's going to be some sort of average to the upside. An average at this point from 6,000, 20% is going to be about 7,200 points, and then a 24% is going to take you out to about a 7,500 point S&P 500. Now, of course, this is looking at roughly 12 months from now. So that's going to be June of 2026. So all the way out here. If we're going to do some sort of line, June 7,400, where am I? There. So some sort of squiggly line up to that point, plenty to go, but of course it doesn't happen in a straight line. There could be plenty more volatility along the way for the S&P 500. Along with that, and coming back to my thoughts here on the US economy breaking but not broken, this one popped up in my feed looking at the pension fund allocations, equities versus bonds. The pension funds are extremely heavy into equity. So the stock market, pushing up the stock market price, the stock price, and a very low in bonds. And we can see that with the bond prices basically breaking to fresh lows. Yesterday they went up, but overall they're sitting very low overall. So anyway, we're at 70 odd % now for pension funds invested into the markets. And according to this, pension funds make up approximately 20% of the total US financial markets. This could be pretty dire come the end of the cycle, which I don't think is the case right now. This is the peak for the real estate and economy cycle that I've talked about many times, somewhere around late 25 or 26, and then the stock markets after that. So maybe the stock markets are late 26 or 27, in which case it's still something around 18 to 24 months as I check my date here, the 13th of June. Happy Friday 13th. So I think there's still a bit of time to go here with more people to get wrecked later in the cycle. But for now, the number still go up. Speaking of numbers go up, and you can see how things are probably not going to align at the end of the cycle. Obviously, my thoughts, Donald Trump here, a $5 million Trump card. So basically a $5 million visa to get into the US. The way I'm looking at this is basically debt. Tons of debt. Everyone's talked about debt. The markets keep going up. So I'm not one of those doomers that just keep banging on about debt for the last 40 or 50 years, thinking that the US is going to go down. I think it's still going to be fine at the end of the day. But leading into this peak, there is a lot that is not lining up for this peak. Trump talks about 15,000 people have signed up for this visa. We do some quick maths. He reckons $75 billion will be there to help balance the budgets. Remember, they haven't put the $5 million down yet. They're on a wait list. Kind of like an altcoin specialty here to help balance the budgets, blah, blah, blah. This is just, pennies in the ocean. There's nothing going on here. 37 trillion divided by 5 million. This is my maths here. That means you need 7.4 million immigrants that are going to pay $5 million to come to the US to balance 37 trillion. Of course, this is just one little thing in the overall scheme of things. Maybe they're going to get some money elsewhere. I highly doubt it. But if you're just doing this alone and just to show how tiny the efforts are, which is unfortunate, and it's, everyone's trying to do their best to bring some more money in. It just doesn't seem like it's going to happen. So really nothing against Trump. It's basically every other government prior to this that has not been able to balance the books here. And Trump just gets the final peak of the cycle again. Poor bastard. He got the mid-cycle slowdown, got destroyed, and he's going to get destroyed at the end here again. Looking at this, Grok, as of 2025, there's only 2.8 million multimillionaires with net worths of 5 million. So even if you only had the 2.8 million, every single $5 million millionaire, you're only going to get 14 trillion. So just 23 trillion to go. It is not going to end well, in my opinion. But in the meantime, let's keep talking about it going up. NASDAQ 100 after it rallies from a negative 20%. So that's what we just saw, this big dump, into less than 2% away from a new all-time high. Has very positive readings here. 6 months, 9 months, 1 year later, 100% of the time, you have a higher market. This is the current signal here, June 6th. Each of the prior signals going back, 35 years or so, have all resulted in positive returns 1 year later. Very, very big returns, actually. 42% is the average increase. That's insane. And the max loss is barely nothing here. I think it's just looking at one of these things. So average max gain, 45%. That's the max gain, so that's average over that 12 months as well. And then any of the losses here is negligible, less than 1%. Of course, smaller sample sizes always produce skepticism and opportunity cost. So it's a small sample size. Do you take the risk not to be invested in the market with all of the data suggesting there is further to go in this cycle? The risk then is the opportunity cost. You won't be in the market. But then the added layer of risk is because how long this cycle has been going on for. So things don't get easier towards the peak. I've always said that the lows are way, way easier. Any of these times are far, far easier. And if you guys remember on the channel, 2022 and early 2023, I was banging the drum that I said, I don't know if this is the exact low, but it seems like a pretty good time to be investing in the market, considering what we have to come with more money printing, with higher real estate prices. Probably likely we're going to see even assets continue to go up just based on the cycles that we continue to follow. And at the time, this is when everyone was talking about recession, including Elon Musk, and basically, everyone. I'm not going to keep going on about that right now. But what we can go on about are what we're seeing with prices going up. And we're still seeing more breakouts here, some nice big campaigns of prices consolidating before they're breaking out. And at the moment, silver is looking relatively good. I've done several videos on this over the last few days. Insane blow off top, no one's watching. Multi-year bull market is kicking off. And then I talked about all the cycles explained in the video just the other day, if you're trying to understand how to overlap each of these cycles, because yes, it can get a little bit confusing. Nothing is really too difficult to understand. The difficulty, I think, comes from trying to layer all of these pieces on top of each other. So it's basically just like a recipe. You can always, you can create anything, but you just got to learn how to layer them on top of each other. And then you've got to learn how to take action on that. Just having the recipes there as to why they're there is one thing. How do you put them all together to make that delicious meal? That's the thing that you need to come up with. Silver, back to that. Looks like it's got higher. It's a 13-year, I'm going to keep telling you that. It's a 13-year breakout point right now. Doesn't mean it's going to shoot straight up. Maybe we take a little bit longer to consolidate again, but breaking out into fresh highs is almost always a very big sign that there are going to be bigger things to come. On top of that, as I said earlier, US dollar just last night broke the low, 97.4. The low that it just broke, 97.68. So this is, again, what we've been banging on about for years here on the channel because of the 18-year cycle. So you have 14 years up, roughly 4 years down, and that's basically been repeating like clockwork for over 200 years, and it will continue to repeat like clockwork all the while land is speculated on. And with Trump in as president, it seems, where's my Trump post? Here. It seems very unlikely that we are going to change anything fundamental about land being speculated on, as of course that's where Trump has made and lost his money, which is within real estate. So this, in my opinion, of course, is not going anywhere. And I think we have, or I'm going to be counting on this moving forward for a peak coming up and then a very, very significant correction, at which time this is going to be the case, or the best time in our lifetime, you know, that chance that we have to then scoop up some more bargains, provided we have taken enough profits on the way back to the dollar. And we've seen this many times throughout history. Just to show that on the chart, this in terms of the timing for the cycle, tops here, bottoms there, second half of the real estate cycle, there are the dates there, roughly speaking, of course. That's the top there for the mid cycle. Okay, and then the market came crashing down in the second half of the real estate cycle. So here it is, second half of the real estate cycle, 2001 into roughly 2005 to 2007. There it comes crashing down. There's a low there, 2007, 2008, consolidates. And then for that first half of the cycle, it runs up, 2011 up to roughly 2019, 2020. It runs up. And now we're on our way down again. That is another sign that we're in that second half of the real estate cycle. And there's probably, like I've talked about, maybe a year, 2 years, maybe stock market slightly longer. That's the sort of time frame I'm looking at now for the end of this move. Okay, guys, like and subscribe. I'll be back with you with another video really soon. If you enjoy that, let me know in the comments section. And yeah, I'll see you back. Cheers. Have a great weekend.